Hello everyone, this is Evan here from the Trade Risk on Wednesday, October 28th, 2020. We are intraday right now, and this is our weekly swing trade ideas video where we bring you stocks based on specific technical price patterns, all of which we'll break down when we walk through those stocks. As always, these videos are sponsored by our partners over at Investors Business Daily. We curate ideas based on their stock lists. You can get access to their stock list with a link in the description of this video. So we're going to jump right into the action. It is a busy day out there. Sellers out in full force breaking these markets down. So a couple of the themes I sort of want to talk about. The first is just at a high level, the VIX. We discussed this and this range here pretty extensively over our past few videos. We were comfortably in this 25 to 30 range for almost 2 months. We broke out on Monday to the upside. So this is bearish stocks. This is bearish market. Volatility expands. This always essentially coincides with bad things happening with the stock market, and we're seeing that play out. A little bit of a delayed action. I mean, we've seen some selling that certainly came through Monday, but not as bad as obviously what's unleashed here in this session. So we've got a VIX trading up at 40. These are historically extremely elevated levels. Obviously 2020 is an extremely unusual year, but you know, you need to see this roll back over, right? For any short-term sustained rally to occur, you got to get the VIX at least trending lower here on a smaller time frame, and ideally it's back below 30. With election day set for Tuesday of next week, you know, we may not see that, right? We're probably going to be stuck with a VIX over 30 for the next at least 3 days. We'll see how things fare after election, but this obviously here is kind of pumps the brakes on short-term activity. This is a time for day trading. This is where day trading shines because ranges are so expanded. There's plenty of action intraday. You don't have to carry the overnight risk and the gap risk, and that's what makes the most sense. So your top trade idea here is that you know, you probably need to rein in the exposure in the short term unless you're very active and you're very experienced and you've traded through these markets. Intraday trading, day trading makes the most sense here. Or if you're willing to extend your time horizon, right? You don't have to be totally off. If your horizon is over the next 6 months and you're trying to position, then that can make some sense too, right? It can make some sense to take advantage of this volatility, to start legging into positions if you're planning on holding them for the long term or longer term. So all of that is basically a riff here just on the VIX and really where we stand there. In terms of making it more actionable, you know, S&P 500, this is sort of the view we've been talking about here in our market analysis videos, and it was 3,400 had been the line in the sand that we had been paying attention to, and you could say, you know, we basically were holding on of that level. Yesterday got pretty dicey until this morning where we gapped you know, convincingly below it, and we are in the midst of continuing to sort of plunge here at the time of recording this. So below 3,400, sort of, you know, all bets are off again on that short-term technical health of the market. And once again, you know, if you're scaling for a larger picture, if you're looking at longer-term moves here, obviously, positioning is going to be different than trying to play the market over the next 1 to 5 days. The other thing I will say about this break, though, is that you know, this isn't a type of move here where it's the first day down. We have been down, you know, more or less for the majority of these days. I think, you know, 80% of days, trading days since the 12th of October have been flat to lower. So, you know, we've seen a good amount of selling pressure here. We are, you know, stretched to the downside. We are ripe for some type of multi-day, you know, bounce. It's, you know, obviously just coming at an increasingly lower price now, and obviously there's going to be a tremendous amount of volatility along the way if we get one. So, you know, lots of things to keep in mind. Basically, you know, it just speaks to, you know, really, you know, if you're going to be transacting here, you have to be experienced, you have to have good risk management policies, and you really have to know what you're doing and have traded these markets before. If we look at the Russell 2000, this started to break down earliest. You can see this is below its level of 159 that we've been paying attention to. The Nasdaq 100 had been holding up best. We talked about this yesterday. If it could hang in here, that would be ideal. You can see that really isn't the case. That's sort of playing out today. It is intraday. We could see, one heck of a last 90-minute rally or 2-hour rally here, which is left in the day, and getting us all the way back. If we could close back over, into the upper 270s here, then, that would be an impressive turnaround rally. But, unless that happens, you still have to be cautious here. We broke 280. We need to get back over 280. We need to get back over 3,400. We need to get back over 155. And we want to see the VIX back below or trending lower, back below 30, or at least in some type of downtrend here. So that's the spiel on the upper level market. And I'm not going to present any bearish ideas today because the market's in play. When a VIX is over 30, basically correlations go to 1. I think you can play, the SPY, the IWM, the Qs, or your sector ETFs, and you're going to get plenty of beta out of those ETFs in a time like this. So that probably most important is what we can share today in terms of what's developed here in the market. I do have 3 names that I'm putting in the bullish category, but again, all of the sort of caveats there apply. iRobot, which again, this could go either way, so that's why I loosely say this is getting placed in the bullish category. The reason though it's sort of in the bullish camp here in my book, is because it is still trading, basically, 14% off a high. So it's a pretty good distance percentage-wise, but this is a higher beta stock. But notice it's not breaking down with the market today, right? So it is hanging in this consolidation. It isn't breaking to new lows. It didn't experience some huge gap down. So this one I think is interesting in both directions. If you want to play it to the downside as some catch-up trade where we get a second leg lower, but if it can hang in here and start to rally, I think this one's interesting. Broader base obviously is bullish here in terms of its development over the past 5 months. So I think it's an interesting sort of relative strength versus kind of where it is on this chart versus a lot of other markets that are getting that technical breakdown. So that's coming on our tight highs scan. So this is a scan that's on our website. You can download it. You can get access to it. It's called Tight Highs Scan. This is coming up on it. EA is hitting this scan as well. So you can see EA, Electronic Arts, is basically back to just the bottom end of this range. It's been consolidating for the past couple of months. You can see once again today it's not breaking down violently, doesn't have some huge gap down, it's not breaking all kinds of structure here, it's holding up. And if we look at this consolidation more broadly, again, this could kind of go either way. It could break down and make a second leg lower off of these highs, or it could hang in here. It's just consolidation and compression, and that's obviously what we like to see as traders, because you can define your risk pretty easy. Last but not least, and this is coming, RPD. So this is hitting, I think this is hitting a couple of our scans today, but this is the gap down recovery scan that we have on the site. Basically a gap down recovery scan, as its name implies, is a stock that essentially had a gap down to start the session, but then is pretty much holding that gap and is now rallying throughout the intraday. So essentially here for RPD, you can see we gap down to about 63 and change, and you can see we are trading at the highs of the day and rallying on the session. So this one here, again, just from a relative strength perspective here, you got a base that's developing. You almost have this nice kind of rounded consolidation here that took place. We're back under highs. This one's quite interesting, again, from that relative strength perspective. So RPD hitting that as well. So that's it. That's what I got here for this week's session. RPD, EA, iRobot, all coming from our TR150 watch list and IBD stock list universe. Those are how we found those stocks, scanning on those particular universes. You can check out all the links in the description of this video. Stay safe out there. It is very much a volatility storm right now in markets, so focus on risk management, and hopefully this video was helpful to you. Every Wednesday we do trade ideas like this. You can subscribe to our YouTube channel or follow us at The Trade Risk. Have a great rest of your day. We'll see you back here on Friday.